Hi, this is Jared from Beyond Accountancy. If you're watching this, it probably means that you or someone close to you is going through a hard time with illness or injury. The purpose of this article is to give you some ideas that might alleviate the financial pressures. Illness can come suddenly and can turn the life of a family on its head. It could be a long-term chronic condition, or it could be a sudden acute sickness. My family's lived through both of those in the last couple of years. The impacts can be significant, and the financial impact can't be underestimated. You might have lost your income due to your own health situation, or you might have had to cut your income to allow you to care for somebody. This adds to the stress of an already difficult situation. So what are your options for outside assistance? Well, I'm going to talk about three things today that you might be able to do. Firstly, insurance, including insurance that might be in your super fund. Second one is early access to super. And finally, Centrelink. Let's start with insurance. If you have insurance policies and you have a financial planner listed on that policy, even if you don't know that person or ordinarily you might not have seen them for a few years, then they're the best person to speak to for advice on this. If you have insurance policies in your own name and there isn't an advisor listed, then call the insurance company and their call centre should be able to direct you to someone who can help. But if you don't have insurance that you're aware of, you might still have it without knowing it via your super fund. Most super funds offer insurance. In fact, nearly all of them do. And I find that a lot of people have insurance in their super without actually realizing it. If you have multiple funds, you might have multiple insurance policies. There are three types of insurance you can hold in super. Life insurance, which pays out in the event of death. But not only that, it also can be paid out if you are given less than 2 years to live to help with those costs at the end. There's total and permanent disability insurance, or TPD. That's where doctors certify that you can't work again. And then income protection insurance, also called salary continuance insurance. For further information on claiming on life insurance, including claiming for terminal illness, check out the Money Smart website. I've put a link in the article that accompanies this video in the description. But it goes through the process here of what you need to do. It pays part of your lost income if you can't work because of illness or injury. Most policies offer cover based on your annual earnings in the 12 months prior to the illness or injury, and it's usually either a limited time policy, normally 2 years, or up to age 65. So hopefully if you're reading this, your situation isn't terminal or permanent, but just a temporary illness that you need to get through, in which case income protection is the policy that you want to be claiming on. Typically the policies will have a wait period, so of 30, 60 or 90 days, and there'll be a fixed monthly amount that you get paid out. If you're able to work part-time or you're able to get other sources of help, then that can reduce how much you get from income protection. So if you are entitled to $2,000 a month, but you're able to work part-time a few hours and make $1,000 a month, then they might reduce how much you get from the income protection insurance. If you aren't sure whether you have cover, check your most recent member statement for your super fund and see if it's listed there, or call your super fund, quote your member number, and then ask them, do I have income protection insurance? How much cover do I have? And what's the process for claiming? And they can help you out with that. Again, if you've got a financial planner, you should be able to do all this through them. So if there's a financial planner on your super fund, they're the first person to call, just like if there's a financial planner on an insurance policy in your own name. Quick little side note, there are law firms who offer to help claim superannuation entitlements for illness and injury. Be careful with these. They'll charge a fee. They might do a no-win, no fee, but they'll take a portion of your payout. Just check first with the super fund or with your financial planner what you're entitled to without going through any legal dispute process, because sometimes the lawyers will take a large fee, but you only end up getting what you would have got anyway. So they can be helpful, but not always, and just do your homework before you sign up for one of these companies, legal companies. So that's insurance. The second part is getting early access to your super. So again, I've linked to the MoneySmart website that lists the normal conditions where you can get your super, like turning 65 or retiring or whatever else it might be. But if you scroll down, there's a section about getting your super early. And there's 4 main ways. So incapacity. So you have to, you can't work, or you've got to reduce your work because of a medical condition. Severe financial hardship. This one's limited. You've got to be unable to meet living costs and you've been on Centrelink for 6 months, 26 weeks. Compassionate grounds to pay for unpaid expenses. That's important. I'll come back to that. Or terminal illness. We talked about before, not just if you're terminally ill, it's not just the life insurance that will pay out, it's the balance of your super fund as well. And there's a link there to the ATO website as well, which goes into this in more detail. Compassionate grounds. There's a couple of traps with this one. The ATO website that I just had on the screen there shows what the grounds are. But one important thing to note is that you can't get reimbursed for medical costs. It has to be an unpaid expense. And you can't have savings set aside to cover the expense. So if, say, for example, you had 100 grand in your bank account, you can't then claim compassionate grounds to say you need the money for the medical expense. It doesn't mean you have to sell your house. So I've had clients who've been able to claim on compassionate release of super, and they've done it based on a doctor's letter, and they've been homeowners at the time, so they weren't required to sell their house. It's just more of your liquid assets like selling shares or cash. As well as paying out to cover unpaid medical bills, you can also get compassionate release if you're threatened with foreclosure. So say for unpaid council rates, or more commonly an unpaid mortgage, you can get the money out there. So separately to that, there's severe hardship. You can claim between $1,000 and $10,000. It's only once a year, and that severe hardship we talked about before was when you've been on Centrelink for 6 months. So once you've met that milestone, you can get up to $10,000 a year. So that's superannuation. It is a high threshold. It is hard to get early access to super. The system wants your money to be locked in. That's the whole point of it, unfortunately. But if you do meet the criteria, that's worth looking into. And finally, Centrelink. There's a lot of barriers for people maybe approaching Centrelink for the first time. Like, I've never even had a Centrelink number, or we're just not a Centrelink family, or whatever it might be, or just it's just a nightmare. It's a pile of paperwork I can't deal with. I understand all those objections, but I would say it's worth the effort. There is help available, and you need to look into what's there that might help you through a difficult time that you're in. So I've still got a few of those different payments. There used to be something called the sickness allowance. That doesn't exist anymore. The New Start allowance, which is the old name for the dole, and the sickness allowance got combined into what's now called job seeker. You may be sick or injured, which stops you from doing your usual work or study for a short time. In this case, you may get job seeker payment. You need to meet certain rules and give us a medical certificate. So you can get job seeker on the basis of illness. It's not purely, as the name suggests, that you're looking for work. If you can't work, that's what you need to be looking to apply to. But what if it's not you who's sick? What if it's a partner or a relative or a friend who you're the primary carer for? Well, there's 2 payments there to look at as well. So carer payment, if you're an Australian resident and the person also is, and they have a high care needs score using the assessment tools, which is Centrelink's way of assessing how severe something is, and they'll be that way for 6 months, and you don't have income or assets above the pension test, which is on the Centrelink website. So that's a higher payment. It's for severe disability, illness, or frail aged adult. That one's harder to get. There's also the carer allowance. So if you're giving additional daily care to someone with a disability or a medical condition, they seem to have a high enough need of care. It's not the same high threshold as carer payment, so it's not as much of an allowance. It's not assets tested. There is an income test, and they'll need to be in that situation for 12 months. So again, you need doctors to cooperate to get any of these payments, and they need to assess the needs of your friend or loved one, and then you'll be able to apply for the care allowance. So those are the three things to look into. So if you're the one who's sick, it's job seeker. I mean, if it's a severe situation, it's carer's payment, but if not, it's carer's allowance. And so you might just need to, go through the hassle of a Centrelink appointment and all that sort of stuff as well. But definitely worth looking at. The care allowance, the income limit's $250,000 combined for couples. So if say it's your partner or spouse, that's quite a high threshold to still get some assistance there. And that might be the difference between really struggling and being able to get through a difficult time, especially if these payments are for people who are going to be needing care for 12 months or more. It's quite a long haul to try and live off savings and other desperate measures. So they're the main three things. A couple of other little things. If you're struggling to pay your mortgage, banks have a hardship team for these sorts of situations. You can explain the situation. They might be able to pause the repayments for 6 months or find some other compromise. Talk to your bank, ask for the hardship team. That's the main point. You can seek help from a financial counsellor. That's not the same as a financial planner. Financial counselling is a free service, and it's different from financial planning. It's where you pay a professional for advice. Financial counsellors help people in financial strife and give you some ideas. If you can get onto a Centrelink low-income card, you can get concessions on registration, all those sorts of things. And that low income doesn't require you to be ill. You can just get a low-income health card if none of those other Centrelink things apply, and at least your bills are then going to be cheaper. Finally, there are other sources of compensation. For work-related injuries, there's WorkSafe, and for car accidents, including if you're a pedestrian or a cyclist, then you might be able to get TAC assistance in Victoria, and there'd be the equivalent in the other states. So those are the main things to think about. Hopefully it's given you some ideas. All the links are going to be in the accompanying article, on our website, which I'll link to in the video. And if you did get any help out of that, or you were successful in getting some payments or even a low-income healthcare card, put a note in the comments and put a like on the video just so I know that this has been useful to you. So yeah, I really hope that's been helpful, and I hope that you can at least get some financial relief in your difficult time. Thanks for watching. Bye.